Welcome to the daily insights that matter. Now, Fitch Rating has maintained its growth forecast for India in the current fiscal year at 6.3%. Now, despite facing tighter monetary policy and export weaknesses, Fitch noted that the Indian economy continues to exhibit resilience. However, they have revised their year-end inflation projection upward due to the threat of El Nino. Now, although the impact of inflation on customers may be temporary, Fitch highlighted that other more fundamental factors are putting pressure on the economy. Now, Fitch said India is not immune to the global economic slowdown, and rightly so, but the domestic economy will feel the effects of the Reserve Bank of India's 250 basis points hike of the interest rate over the past year. Additionally, a poor monsoon season could complicate the RBI's efforts to control inflation further. Now, in the first quarter, India's GDP grew by an impressive 7.8%, which is a significant improvement compared to the 6.1% growth seen in the previous quarter. Now, the 7.8% GDP growth in the first quarter appears impressive. It's important to recognize that the favorable base effect has played a substantial role in making the growth rate seem larger than it would under normal circumstances. Now, several other agencies have also provided growth estimates for India for FY24 ranging between 5.9% and 6.5%. Now, the IMF forecast is the lowest at 5.9%, while the RBI has the highest forecast at 6.5%. Now, while these growth projections may not be exceptional, it's important to consider the context of the global challenges we are currently facing. Even with these forecasts, India is expected to be the fastest growing major economy in the world. Now let's look at the Indian aviation sector, which has been abuzz on the back of strong demand. Indigo has managed to maintain its top position as India's largest airline with a remarkable market share of 63.3% in the month of August. Vistara saw a rise in its market share compared to the previous month. The airline managed to capture 9.8% of the domestic aviation market in August, up from 8.4% in the previous month of July. Now, the market share of Air India stood at 9.8%, with Air Asia India's numbers coming in at 7.1% in August. Now, the combined market share of all the Tata Airlines, which is Air India, Vistara and Air Asia India, was pegged at 26.7% during the same time. Akasa Air's domestic market share took a hit, slipping to 4.2% in the month of August from the previous month's high of 5.2%. Now, this decline was due to flight cancellations stemming from the resignation of some of the pilots who opted to join rival airlines over the past few months. Now, consecutively, Akasa Air now finds itself in the 6th position, trailing behind the financially strained SpiceJet in terms of domestic airline market share. Now, India's aviation sector is experiencing strong demand. Many players are now considering ordering new aircrafts and expanding their capacities to seize a larger market share. Now, last month, Indigo made headlines by placing an order for a staggering 500 A320 neo aircrafts from Airbus. Now, this deal represents the largest single carrier deal order in the history of civil aviation. Now, furthermore, earlier in the year in February, the newly privatized Air India ordered a total of 470 narrow and wide-body jets from both Boeing and Airbus. Now, these developments signal significant changes in India's commercial aviation landscape, and the upcoming years are poised to be particularly interesting for the Indian aviation industry, with the potential for increased competition in the domestic market. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com